We're glad to have you with us. This is Business Incorporated on Channels Television. I am BC Atibayo. On the show today, IMF says Zimbabwe's economic reform agenda is off track. In Kenya, to propose law to tackle illegal trade through shipping. Plus, South Africa's Treasury warns of debt trap if wage cuts do not materialize. But first, let's turn to the markets, and we begin in Africa, where major markets were all in the red at intraday. South Africa's JSE shaved up 1.29%, while the NSA in Nigeria lost 0.17%. In Egypt, the EGX 30 was lower by 0.83%, while Kenya closed negative on Wednesday. And most bourses in the Gulf fell further today as a rise in the coronavirus cases outside of China heightened fears of a pandemic. The index in Saudi Arabia lost the most by 1.71%, while Qatar's market was down 0.61%. In the UAE, Dubai's index shed 1.17%. Only the index in Abu Dhabi gained 0.22% at intraday. And European stocks also plummeted further today as the rapid spread of the coronavirus continues to dominate market sentiment. Let's bring in Chelsea Gilani, my colleague at the Frankfurt Stock Exchange, who's standing by to tell us more from the European scene. Chelsea, good afternoon. Markets extended declines today as investors continue to assess the risk of growing coronavirus outbreak in Europe. Are traders in Frankfurt bracing for more volatility?
I think at this point, investors don't see a near-term upturn for the market. I think a lot of investors expect this route that we're seeing to continue until there are clear signs that this outbreak is really under control. We're already seeing a lot of impacts to the European business sector. A lot of companies, particularly in Italy, where the outbreak has been centered, are asking workers to work from home. We've seen factories close. We've seen a lot of impact there, and that's really going to have a ripple effect on other European economies. Germany, for example, is very dependent on industrial products from that region of Italy. So this could already add more pain to European companies that are also struggling with supply chain disruptions from Europe or from China right now. And we've other companies here in Germany are talking about things like putting workers on unpaid leave, canceling business trips. But I think investors are really trying to sort of suss out what the full economic impact of this is going to be. But it's clear that it is going to have a dramatic impact on the economy.
In other news now, the EU could relax its rules on public spending limits to help economies like Italy cope with the economic impact of the virus. But could rising government debt end up hurting the EU economy in the long run?
That's certainly a concern especially if you look at a country like Italy that already has a huge public debt burden. Italy's debt to GDP ratio is at 140%. It's already been under a lot of pressure to cut back on public spending. So if they take on more debt to help cushion the blow from coronavirus here, that could in the future become a problem for them, especially if the economy remains quite weak. They could have trouble paying back that debt in the future. But economists also are warning here against not taking any action for these economies, because if a country like Italy that's really seeing a broad-based slowdown in the economy doesn't take steps like cutting taxes or giving more loans to businesses, that could end up having an even more significant economic impact down the road.
German chemical company Bayer reported higher sales in the fourth quarter, but announced that its chairman would step down early amid a major legal battle over its Roundup herbicide. Now, how are investors taking this news?
The stock is down about 3% right now. That's pretty much in line with the broader market here in Frankfurt. But this report was quite mixed, and there was also a lot of different things going on. The earnings themselves were basically in line with what investors and what Wall Street analysts had been expecting. They saw a pretty big increase in profits. They saw revenue rise. They are still dealing with things like a slowdown in the agricultural sector in the United States, but there was also a lot of new information on these Roundup-related lawsuits that they're facing. They've seen a big jump to almost 48,000 cases in the United States that are seeking compensation against Bayer for health issues stemming from use of Roundup. So that could end up being a big problem for them down the road. They're still sort of making its way through the court system through appeals and settlement negotiations. But analysts have estimated that this could cost Bayer up to 20 billion euros, and they haven't really taken that into account yet. So I think the underlying results here seem to be pretty good, but there's still a lot of risks in regards to these lawsuits.
Thank you, Chelsea. And as worries over the impact of the coronavirus continue to rattle investors, markets in London are not immune. The FTSE 100 index was down 144.86 points in the first few minutes of trading today. The mid-cap FTSE 250 index fell 334.86 points. But let's get more of the intraday numbers from Juliana Olayinka, my colleague from our London studio. Juliana, good afternoon. What are the intraday numbers looking like at the moment?
Not looking great, Bissy. In fact, traders here in the city are calling today Panic Thursday, and that's because there is sheer panic. In early trading, the FTSE was so low, they hadn't seen those points since 2018. At intraday, the FTSE All-Share is down 2%, the FTSE 100 is down 1.92%, and the FTSE 250 is down 2.44%. In currencies, the pound is also down on the dollar by 0.21%. Down on the euro by 0.79% and down on the Japanese yen by 0.58%. It appears as if COVID-19 or the coronavirus is going to spread sentiment for some time, particularly now that Italy have confirmed 2 more people have died, bringing up that number to 14. And of course, we've got 2 more cases confirmed in the UK, bringing up the suspected cases here to 15.
Juliana, a raft of earnings results out there from National Express to WPP to Aston Martin, Vistry Group and Rent Oil. Now, which of these is getting investor interest?
Well, they're all quite interesting. It's hard to kind of beat the coronavirus headline, but I suppose the largest story that people are talking about amongst the heavyweights is WPP. They're the huge advertising and marketing agency, and their shares plummeted by about 15% after they announced their profits from the end of 2019, which are down. They failed to make any gains in the fourth quarter. Before tax, profits dropped 21.9% to £982 million. Also, as well, their revenue fell by 7.6% to £10.8 billion. So still a lot of money, but they're still struggling. They've had quite a tumultuous couple of years. Their founder stepped down, and it was a little bit difficult, so to speak. That case is still in court, but they've also struggled with what's going on with COVID-19 and the Hong Kong riots, because outside of US, Asia is the biggest advertising market, and they're really struggling in that area. Also, as well, their sales in Europe, particularly in the UK, where advertising has struggled, considering online is where everybody wants to go. They've said that they're struggling there. So, yep, still hitting nearly £1 billion in profit, but that's seen as a loss for them, which is why their shares dipped so low at early trading.
One more thing, Juliana. A campaigner group has won a Court of Appeal ruling against the controversial plans for a 3rd runway at Heathrow Airport on environmental grounds. Now, will the government be heading to the Supreme Court over this?
The government won't be heading to the Supreme Court. The Transport Secretary did say that they won't be appealing the ruling, but Heathrow certainly are. Their Chief Executive Officer has just been speaking on British TV, and they're not happy. And in a statement, they basically said, no Heathrow expansion, no global Britain. That's the sentiment that they feel. Heathrow as well is seeing millions and millions of people go into their terminals throughout the year, and they say they're struggling to cope. But if you live in the UK, then you'll be familiar familiar with the Heathrow third runway story because it has been dominating headlines for very many years. And the Prime Minister, Boris Johnson, he's in a sticky situation because when he was the Mayor of London a few years ago, he was one of the main campaigners saying that there shouldn't be a third runway. And at that time, it wasn't really about climate change. It was mainly because of the people in the local area that have been struggling for years with noise pollution. But now, of course, if there is a third runway, they will be demolishing their home. The three judges that sat in court today, though, only threw the case out for a technical reason. Since the Paris Climate Act, which Britain did sign up to in 2016, they committed to cutting net zero emissions by 2050. But with the document that Heathrow put into Parliament for the third runway, it didn't detail the commitments to Paris. So the Heathrow chief exec still feel that they've got a leg to climb. And like I said, you know, they're quite vehement in their statement saying if Britain does want to be global, especially as we're coming out of the European Union, then a Heathrow expansion is the only way to do it.
We'll see how that plays out in the coming days. Many thanks, Juliana.
Thank you.
Major Asia-Pacific markets were mixed today as investors remain cautious over the fast-spreading coronavirus that has infected more than 81,000 people and killed over 2,700. Japanese stocks led losses among major markets in the region as the Nikkei 225 fell 2.13% to close at 21,948.23, while the Topix index ended its trading day at 2.37% lower at 1,568.06. In South Korea, the Kospi closed 1.05% lower at 2,054.89 as the Bank of Korea kept its policy rate unchanged, while Hong Kong's Hang Seng Index was largely flat as at the final hour of trading. Mainland China's stocks, on the other hand, bucked the overall trend regionally as they saw gains. The Shanghai Composite rose 0.11% to about 2,991.33, while the Shenzhen Composite also advanced 0.24% to around 1,895.13. In Australia, the benchmark ASX 200 closed 0.75% lower at 6,657.9 as shares of the major banks in the country sold out. The U.S. stock futures pointed to declines at the day's open even after President Donald Trump tried to assert concerns over the coronavirus outbreak. Earlier on, we saw the Dow indicating a drop of 300 points. On the S&P and Nasdaq also pointed to opening declines on Thursday. Worries over how the coronavirus will impact corporate profits and global economic growth have brought the U.S. stock markets this week as the number of confirmed cases increased. Away from the markets now, the International Monetary Fund says Zimbabwe's economic reform agenda is off track and the risk of deep humanitarian crisis are high without further donor support. According to the IMF, delays and missteps in foreign exchange and monetary reforms have failed to restore confidence in Zimbabwe's new currency, and the government's re-engagement internationally on debt arrears was still delayed, constraining its access to external support. The fund says without an increase in donor support, Zimbabwe has a high risk of humanitarian crisis, with more than half of the population without food security, another poor harvest expected, and growth in 2020 projected at near zero. And Kenya plans to propose a bill aimed at cutting illegal transactions and bringing transparency into the shipping industry. The bill, which will require banks and other financial institutions to identify people sending and receiving money and to assess the risk that the transaction might be used for illegal purposes, is expected to be presented to Parliament for enactment before the end of this year. Once it's adopted, the law, commonly known as Know Your Customer, will be aligned with the East Africa Protocol on the Prevention and Combating Corruption and Illegal Trade. The government agencies involved are led by the Ministry of Interior and the Treasury, as well as the Judiciary. When we return in just a moment, we'll bring you updates from the domestic commodities market and more. Please stay with us.